Hey VV Nation, welcome to the Friday 6 p.m. video. My name is Glenn, Senior Stock Market Strategist for VectorVest. Glad to be here, glad to have you here. And we're going to be in week number 2 of my technical analysis series. Last week we talked about moving averages. This week we're going to talk about candlesticks. I'm going to start off really slow and helping you guys to understand what a candlestick is and the characteristics of a candlestick to give you more insight on how to trade a candlestick. So the first thing that we're going to do is start off by looking at what a candlestick is. All right, so from a candlestick perspective, here's the body. The body is going to show the open and close for the day. Now, before I get into more of the body, in the VectorVest perspective, a lot of people ask me, what is the difference between an open body and a closed body? The easiest way I can explain that is always look at it as a shade. If the candle is closed and it's filled in, if it's a filled candle, then that means the price started at the top of the candle, you pulled the shade down, and it finished at the bottom of the candle. Not counting the wick, but just at the bottom of the candle. An open candle, still keeping the shade perspective in play. If it's an open candle, unfilled, then that means the price started at the bottom of the candle and went up. So I think that looking at it from a shade perspective gives you insight on why the candle is either filled, because the price went down from the open, or if it's unfilled or open candle, that it went from the bottom of the candle up. And that's one of the biggest questions that I got when we talk about the VectorVest perspective on a candle. So now, talking more about the body, and don't worry about if it's closed or open right now, but here's the body, the actual price movement of the open and the close of the candle. The wicks, the upper wick, in this case called the shadow, the upper wick and the lower wick show the highest price for the day and the lowest price for the day. Opening or closing, whichever is less, this is where the stock price, in this case, because it looks like it's a closed candle, the price started here, we pulled the shade down and the price started down, finished down here. Most likely this will be a red candle depending on its price action from the previous day's candle. All right, so I don't want to get any deeper than that, except for having an understanding you have a body, you have an open and a close, and you have wicks which show the highest and the lowest price of the day. Now, I was going to read about this from What is a Candlestick, but I changed my mind. I want to get straight into the candlestick patterns that we're going to cover today, and there's a few of them. They're all going to be bullish candlestick patterns, and if you understand from the bullish side what's going on, you'll be able to wrap your head around the bearish side of what's going on with the candle as well. Bullish engulfing. Here's the picture. Here's the candle. All right, happens to be an open candle, which again, the price started here and finished up here, but it engulfs, because it's open and it's bullish, it engulfs the previous candle. That means, see here where the open and the close are, it engulfs or encompasses that full candle. That is a bullish engulfing. And something that you need to know, it is an important bottom reversal signal. All right, let's talk about a hammer. A hammer normally happens at the bottom of a trend, and a hammer looks like a body, but the wick or the shadow is 2 times the size of the body. Here, we've got a lot of bulls coming in, pushing the stock's price higher, even though the body is smaller than the wick. This is a body normally found at the bottom of a trend. It looks sort of like what we call the hanging man, which is found at the top of the trend. All right. Bullish inverted hammer. This pattern consists of a black body, in our case a red body, followed by an inverted hammer that has got an upper shadow and a small body. Sort of almost like a shooting star, but that's normally found at the top of a candlestick pattern as well. So understanding where these candlesticks fall, whether at the top of a trend or at the bottom of a trend, really puts an emphasis on how bullish or bearish it is. Now, this appears in a downtrend and signals a bullish reversal. Downtrend, we've got an inverted hammer, boom, goes up. All right, one white soldier is a pattern that appears in a downtrend, and it pierces or goes outside of the prior candle. This is a red candle or a bearish candle. This is an open or a bullish candle. One white soldier overtakes that candle and is a bullish kind of scenario. All right, let's go to a bullish piercing line. Now, this is an interesting one. This closes more than halfway into the prior body. So you see the red, in our case, this would be red, a closed candle, a red candle, downtrending. This is a bullish reversal, but it's got to go at least halfway through that candle of the prior day in order to be looked at as a bullish piercing. And one more, the bullish squeeze alerts. We see hear about that a lot, about bullish squeezes, but this is a 3-day candle formation. Notice that all of the other candles that we were looking at were 2-day candle formations. This is a 3-day candle formation. And notice that squeezing the price, here's 1 day. Notice that the other 2 days are within that candle. We are squeezing in price. All right, notice that we got lower highs, but we also have higher lows in the candle. It's a consolidation, but it's known as a bullish squeeze. Following break to the upside following this pattern, especially if the pattern is preceded by a strong downside move. All right, those are the candlestick formations that we're going to talk about. And the cool thing is that within the VectorVest software, you can find these candlestick formations. We have them in a folder called Searches Candlesticks. And what I'm going to do is I'm going to take you back in time to the beginning of September. I want to show you the patterns as they developed, and I'm going to show you how to find confirmation. I'm going to also give you some ideas of stops on how to get out. I'm going to walk you through how to trade these patterns. So I went back to the first trading day of September, 9/3, and this is the bullish engulfing. I am not going to go deep into how they're set up. All I need you to know is we've done the work for you to find these patterns. That's all you really need to know right now. I'm going to run the search. I'm only going to look for the top 10 stocks on that day, 9/3. Ryan's been talking a lot about insurance companies, right? Notice that, let's go take a look at them. Let's go graph them all, and let's go back to 9/3, September 9/5, 9/4, 9/3. And this is, again, the bullish engulfing. Notice that on this day, look at the body compared to the prior day, the open body or the bullish body overtakes or engulfs the prior day. Now, what do we look for before we go pull the trigger on the trade? One, we need to get confirmation the next day. And we did. Boom. We would have pulled the trigger. Now, when would you have gotten out of the trade if it went against you? I like to use the bottom of the wick of the actual bullish engulfing. So let's go draw a line right at that level. There it is. Boom, we would have gotten in. We would have said, oh man, this sucks. We would have stayed, we would have stayed, we would have stayed. And this is where I would have gotten out at that level of the wick on that candle. That might not have worked out so much. All right, let's go to the next one. Let's go find 9/3 on the graph. 9/4, 9/3. There's the bullish engulfing. No confirmation the next day. Boom. You don't pull the trigger on that trade. Here's another one. Bullish engulfing, no confirmation the next day. Boom. You don't pull the trigger on that trade. Bullish engulfing, no follow through the next day. And you know something? Without the follow through, you save yourself a lot of heartache during this time. Let's go to the next one. Bullish engulfing, yep, engulfs the prior day. No follow through. Woo! All right, bullish engulfing, no follow through. I love this. Bullish engulfing, no follow through. This is what, bullish engulfing. All right, and we have follow through. Where's the wick, the bottom of the wick of that candle? Right down here. Beautiful trade right there. Beautiful trade. That's why confirmation is so important. Bullish engulfing, follow through, and I would have gone to the bottom of this wick down here as a get out. We're still in it. But if you see the stock start to teeter off, don't be afraid to take half off the table. You made a profit. Bullish engulfing, no follow through. All right, let's go to the next one. Hammer. If I had a hammer, I'd hammer in the morning. Let's go to 9.3. Let's go find 9.3. Should be right about here. There's 9.3. Now, always remember the best part of the hammer is when it's at the bottom of a candle, of a pattern. Notice that almost might have been a hammer, sort of, kind of, not a pristine hammer, but look at the follow through. All right, here, I would not have taken it because stock was moving sideways. Same thing here. So this pulled down a little bit, found a level of support. There's the hammer. I got a little bit of follow through. The candle is green. I got a little bit of follow through. Here's where I would have put my stop. I'm still in the stock. This would have been a little bit more of a volatile trade, though. No, not there. Next one, no. A lot of these are moving sideways. No, I'm not feeling that. No. At the bottom of a move, look at that. I did get followed through the next day. Notice that the volatility almost got me out, but didn't. And then that would have turned out to be a decent trade. All right, let's go to an inverted hammer. Let's do the same thing. Graph them all. Actually, I'm only going to graph a few of these now. Let's go find 9.3, 9.6, 9.3, inverted hammer. There it is. As the stock is going down in price, no follow through. Now, it did sort of kind of work out, but I need you to have follow through. That one did give me follow through, but it would have gotten me out because it went below the level of that candle that I looked at. No follow through. I'm not feeling that stock. No. There we go. Inverted hammer. Follow through. Move up. This is why I like making watch lists of these stocks. Inverted hammer, no follow through. No follow through. All right. So that's why I go through all of these searches. I find the stocks, I put them into a watch list and look the next day to see if I get follow through. Let's do one more. One white soldier, sort of like a piercing pattern, except for it exceeds the candle, the prior day's candle. Let's go find 9.3, 9.4, 9.3. Look at that. Pierced, but one white soldier outside of the body from the previous day. I got no follow through. I like that this trade did come through, but without the follow through, I'm not taking it. All right. That's why I put them into a watch list. One white soldier, no follow through. One white soldier, no follow through. One white soldier, no follow through. Another stock that did go up, but guess what? That's why I have it on my watch list. One white soldier, follow through. I would have put a stop right about at the candle. That would have been a close play. That would have been a close play, but it ended up working out. That might have been a close play, depending on where I put my stop. One white soldier, go back to 9.3, 9.9. 9.3, one white soldier, no follow through. Follow through is so important. No follow through. No follow through. No follow through. Follow through. Here's the one white soldier. All right. Follow through. Nice move up. So without going through all of these, here's the piercing pattern. Without going through all of these, you now know what to look for. That didn't have enough data for me. Let's go find 9.3. 829, 9.3. Aha! So what was this? This was a piercing pattern. It pierced halfway through the prior day's candle. Follow through. That would have been my stop at the bottom of that candle. Made some money. Ooh, what was that? That's a bearish engulfing. That's a bearish engulfing. That would have been a good day to take the profits off the table. So I can work them on both sides. Piercing pattern, no follow through. Piercing pattern, no follow through. Piercing, not. So just because we have the searches, that's why looking at the graphs are so important on making sure that you have followed through is so important. I know I just put a lot into this video for you, but hopefully I went through slow enough for you to understand what a candle is, how it works, and then within the VectorVest software, we have candlestick patterns for you. You now know what to look for before you jump on board with the trade, number one, and now you know what to look for as far as how to trade it to make sure you're profitable. Again, a lot of information, but I think it was well worth it to give you the education on how to trade candlesticks. Folks, this video is over. And until the next time, as a matter of fact, before I go, if you like this video, make sure you like it and share it to give somebody else the same education that you got. If you're brand new to the channel and you enjoyed the content, make sure you consider subscribing to the channel, hitting the bell icon. Folks, this is great education. We do the work, you reap the rewards. Now, this video is over. Until the next time, see ya. You guys have wanted it, and we're responding. You wanted an extension to the end of summer education sale, and we're giving it to you. This sale now is extended up to September 30th of 2024. That's right, up to 70% off on some of the courses that we offer. And you know something? Nobody ever is going to invest your money like you do. It's important that you get the best education possible. We've got bottom fishing courses. We have technical courses like Trade Like a Pro, Options Jumpstart, and knowing when to sell. And guess what, folks? There's another caveat. It's 100% money back guarantee. That's right, folks. Go to www.vectorvest.com/sale to take advantage of some of these courses. And you know, there's an all-access package you can do for the best value. www.vectorvest.com/sale, extended up until September 30th. Hope you take advantage of it.